Market is going wild right now. They really like this election result, it looks like. But the question as always here is the market playing us? Because the market loves to play with our emotions and our money. So this might not be real. This could easily be a false rally that's ready to reverse, but that's what we're gonna talk about in today's video. Gonna hit our classic market review that everyone knows and loves. And as always, we'll start with a quote from Mark Douglas, Trading in the Zone. That's the name of his book, a great psychology book for this market. The winners have attained a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all confident in spite of the adverse conditions. As a result, they are no longer susceptible to the common fears and trading errors that plague everyone else. This discipline right here and this confidence is hard. That's why it's the winner's attitude, and is also why 99% of traders fail. But to be confident in something, first you need a strategy that actually has an edge that you know should work over time. Once you have that, then you got to work on your psychology and say like, okay, how do I get myself to execute on this day in and day out? It's really two steps to be successful in the market. And I would say having the winning system is actually the easier of the two steps. And you could call it a system, a strategy, whatever you want to say that works in the stock market, that makes you money. And a lot of people are surprised at how hard the psychology becomes. It's like if I gave you a little red button to push and I said, if you push it, you're going to make a bunch of money. You just have to make sure to push it every single day. All of a sudden there'd be all these mental blocks on why you shouldn't push it. That's what kind of happens in the stock market too, but of course in a way more complex way. Because as I said before, with the stock market, you get to see moves like this, but then you also get to see moves like this back on September 3rd. So it really plays with you seeing your money go up and down. But that's why when we teach people our strategy that we use at Fallible, it comes with the psychology training too, because it's so important. It's just two sides of the same coin to be successful in the market. And by the way, if you want to learn that strategy and how to control your psychology, then definitely check out this free training. There's a link in this video and down below in the description and comments. Shows you the exact strategy we use and how the psychological component fits into it, which is so important, as I keep saying. Definitely check that out. Moving on, outside of the US markets, a market that is looking really good, really bullish, is Japan's market. The Nikkei saw its highest weekly close since November of 91 last week. It's a lot of years. So things are taking off in Japan. Bloomberg Intelligence scored 135 economies on their propensity to innovate and absorb existing technology, drawing on measures of institutional quality, IT infrastructure, the business climate, and human capital. That's a lot of words for basically saying how good are they at technology. And they found that Japan, the US, and Germany show the greatest potential. So again, Japan looking real good. One of the companies that we're looking at, which is a Japanese stock, is Murata Manufacturing. And you can see it's breaking out of its formation right here. And this is just one of the many overlooked, underpriced, and well-run companies in Japan right now that we're actually digging into. I haven't made any videos on Japan just yet with this latest trend, but I will soon. But in the meantime, you should definitely check out this other trend that we're tracking in AI. That's where most of my videos have been focused, and it's really interesting and a lot of money to be made here. I put together a playlist here. There's 4 videos so far. I'll be adding more, but definitely check out these videos. We have about 6, maybe 9 stock picks so far, and they're taking off one by one. So there'll be a link to this playlist in this video and down below in the description and comments as well. Hot trend. And it's not a short-term one either. It's going to happen over the next 10 years. So start looking at it now. According to Bank of America, the gold minus oil annual net return just spiked to its highest level since 1979. And what is that saying? It's just saying gold is way outperforming oil, which we kind of know, right? Because gold has been taking off. And the other thing that's been taking off because of gold are miners. So precious metals have been a little overbought over the last few months, but they're working that off. So now when we're looking at the miner space, there's a lot of great technical setups. One is in core mining, CDE. It just broke out a 4-month bull flag. So here's some technical analysis for you. Another pattern that you could always look for is this little bull flag. So you draw it like that, and you can see, hey, it broke out. And this breakout I kind of like even more because see this 50-day moving average line, which is this gold line right here? It's right near that breakout. So with this breakout, if it decides to come back, if it's failing, it will have a very strong support right here. So some people like to buy on this breakout right here. Other people like to wait for it to retest this line. Now, will it always retest the line? No, the strongest breakouts will just keep going. But a lot of breakouts do fail. And the way you kind of complement your technical analysis to make sure your breakouts fail less is putting some fundamental work behind it. Is there a reason for the breakout? Should people actually be looking at this? And if there is, there's more likelihood that the breakout will hold. Now, of course, even after doing all that research, they can still fail, which is why doing research sucks, in my opinion, but I'm very lazy. A lot of people obviously love to do it. I even have a research company company, so you know. But anyway, what's also interesting about technical analysis is that I could take this little line and just kind of move it right here and say, hey, this is still in a consolidation zone and it hasn't broken out yet. So maybe what I want to see is that this price breaks above this recent high. So again, the way you play it is up to you, because what could very well happen is that it gets to this line and then it starts failing, because this is going to be a resistance line too, right? There's overhead supply. So what some people will do, short-term traders anyway, they will buy right here out of the breakout of this bull flag, and then as it gets up here, they start selling. So what is that? Almost a 20% gain, around 18%. So it's not bad, but I also don't like playing short-term moves like this, but that's just my preference. This is a strategy that's very profitable, just takes a little more work. But when we're talking about it here and what we're digging into, it's always a longer term play. You can see on this chart right here, we're looking all the way back to 2018, looking at price breaking that level. So as long as it holds above, you know, you got a lot of room to run. And that's your technical analysis lesson for the day. So much fun. Now let's move to some more stats about the NASDAQ. The NASDAQ 100 rallied 9.4% over 5 days, and this was last week. So this is among the top 1% in its 35-year history. This was also the NASDAQ's second biggest price thrust since March 2009. The biggest was after the March 2020 low. But price thrusts like this are usually seen after major lows in the stock market. As a general rule, the stronger the initial price move, the more bullish the long-term implications for stocks. And by the way, this is from macro charts. As long as the market remains above the September-October lows, this is a potentially bullish signal which could carry higher into the year end or longer. You can see on this chart, they're pointing out every time this type of thrust is happening, you can see we run hard. So this is a very bullish sign. Now, according to our indicator, sentiment and positioning are now biased long, and that means they're becoming a minor headwind for stocks, which means it's a bearish type signal. But there's still plenty of room for sentiment to improve before it flashes a major sell signal. You can see we're bullish, but we're not extremely bullish just yet. And remember, sentiment is kind of a contraindicator. It works in the opposite way. If people are super bullish, that's actually a bearish sign. Why? Because everyone has already thrown their money into the market, and at that point, what is there left to do other than sell? And if everyone's selling, the price will go down. So what you really like to see is everyone's super bearish, because that means there's a lot more room for the market to run, because all those bears eventually got to turn into bulls one day, right? They eventually got to invest and put their money in so they could fuel some of the further buying. So that's why when you look at this Bank of America indicator, you can see that when everyone wants to buy, it's actually an extreme bearish signal. When everyone wants to sell, then it's extremely bullish. So it's like opposites. That's the way to look at sentiment. Bitcoin has been absolutely on fire, but interestingly enough, you're not hearing your Uber driver talk about it anymore. And that's because this next big bull market is likely going to be from institutionals and not just retail guys. And this is how it kind of goes with new technology or new assets. Is first it starts out as just a lot of hype, and then it gets more and more adopted. So this run that we're going to see in Bitcoin now, it's going to be fueled by actual institutions. So it's becoming more and more legit as time goes by. But of course, along the way, we're going to see more bubbles and more popping of those bubbles, but Bitcoin is here to stay. Now, in the short term, Centix notes that sentiment is running a bit hot, which again, as we just explained, that's not good. If people are really bullish, got to look out below a little bit. So we shouldn't be surprised if we get a little pullback or consolidation in Bitcoin. But overall, the trend is just starting. Brandon, who's our analyst at MacroOps, tweeted a bunch of companies that are highly shorted, but they have strong technicals and compelling fundamentals. So the idea there is that if these are actually good companies that have a bunch of people shorting them, well, when things turn around and people start buying, those shorts are going to get blown out, just like we saw in Tesla so many times. And then what happens when shorts are getting blown out? They have to buy. They have to buy back those shares that they're shorting. And when they do that, that fuels the market even higher. So it's more and more buying, and you get this reflexive loop, and you can make a lot of money. And we all saw it play out in Tesla. So a potential strategy is finding those companies that you think are legit that a bunch of people are shorting. One of them is On Track right here. It's an AI-powered virtualized outpatient healthcare treatment. Has high revenue growth, 2 million to 35 million in 5 years. Wow. Has a long runway with strong industry tailwinds. Positive net cash and high insider ownership. Over 30% of the float is short, meaning there's a lot of people shorting it. So this is another stock in our AI theme that we're really tracking closely. Again, definitely check that out, because in the latest video, this top 3 stocks to buy after the election, which by the way, I'm about to change all these names so they're more readable. But in this video, this last one, we go over what we're looking for in these AI stocks. And remember, this is the playlist you can access. I have a link in the video and down below in the description and comments. But one of the things we're looking for is industry penetration. How much room when we apply AI to into an industry, how much room does it have to grow? That's very important in finding these AI companies. Brandon has some other good stocks here too, not AI related, but they fall under this heavily shorted category. One is Dillard's. This old school department store is actually doing pretty well. You can make some good money on it. And you can see right here, it's forming this tight triangle consolidation. It has a short float at 42%, lots of people shorting it. And it's a low volume stock, so not many shares. So if something does happen, it's really gonna throw the price higher. Another one is Kingsoft, KC. By the way, Dillard's was DDS. So you can see right here, it is close to this breakout out of this consolidation. And they are public cloud service solutions. They have lots of revenue growth, 79%. Great cash, great triangle chart, and they have a short interest of 46%. And finally, we got Revolve, RVLV. So they're an online fashion retailer, mostly for women. And what to like about it is that the co-founder has skin in the game, so they're highly invested in the company. They have a long history of operating profits, strong data advantage with their own customers, just like Stitch Fix. And once again, in this video, we actually talk about Stitch Fix and why it's an AI company, which you wouldn't think because, they're selling clothes, but the real power is in their data. So this has an inverse head and shoulders pattern ready to break out. Now, going back to the US market specifically, are we going to crash? What's going to happen? This is very, very strong action that we're seeing post-election. And it obviously helps that today, and I'm recording this a little earlier than it'll be released, I think, but Pfizer came out with news that the vaccine they're developing with this German drug maker, BioNTech, they said that it was more than 90% effective in preventing the CCPV. And by the end of this year, they'll manufacture enough doses to immunize 15 to 20 million people. So this is big, big news. Well, at least it's big news according to the stock market, which is still flying higher after that Biden win. And if you watched our previous market review video, the election one, we said that the worst possible outcome for the market would be Biden winning and then the Senate staying red. But it looks like that's what's going to happen, and that's what the market is pricing in, and the market absolutely loves it. So we were completely wrong, because what we were thinking is that if you have a Democrat president, Republican Senate, then they're going to fight over every little thing and we won't get the stimulus pass, which is what we want for stock prices to go higher. More and more liquidity. But that's not how the market is viewing it, as we can see in this huge price rally. So I guess instead of being the worst possible outcome, this is the best possible outcome. We were also expecting the S&P to trade in this range between 3,600 and this bottom here, 3,200. So we said 3,500 to 3,600 is a zone of major resistance. It's where that upper trend line of the 3-year broadening top, which we've been tracking, this black line, that's where it meets the upper Bollinger Band. And the round number of 3,600 has rejected the market multiple times. So inertia, we said, favors a continued sideways range until the market can put in a decisive weekly close above this level. If we're looking at the price action today, it looks like it has smashed that level. But this is only 1 day's worth of data, and not even. I'm recording this pretty early Monday morning. So if we really want to be certain that we've broken this level, we got to look on the weekly charts, which is what I just switched to. So if 3,600 is right around here, we need to see this weekly bar close above. Because like I said, it's only 1 day of data, right? So what could happen is, hey, we break above, and who knows, by the end of the day today, we could end up lower again, and it'd still be a very nice positive day. But what could also happen is kind of what happened when you look at the weekly chart again. See this long wick right here? Went up to the 3,600 level and collapsed lower. This could make a long wick too. So I wouldn't say we have for sure broken this level just yet, but it's looking pretty good. We got a Biden win. The weather is nice for once. We got some hope for a vaccine. Everything seems like it's going higher. So what does that say about our previous analysis? Are we idiots? Are we completely stupid at macro ops? No, it's not true. Because like I said in that video, what we were doing is gauging probability. So we thought there was a higher probability that if this outcome happened, the market would go lower. But that wasn't a certainty, right? There was also another scenario where the market could launch higher. We didn't think it was probable that this result would equate to a market like this that's just taking off, but it's always possible. And that's why it might sound like semantics when we're talking about probabilities instead of certainties, but it keeps you in the right mind state so that you're not locked into something that's definitely going to happen, because you never know in the market. That's why risk control becomes so important. That's why changing with what is actually happening becomes so important, being flexible. And for me personally, and for all our Fallible members following the Fallible strategy, using it, this is when this system comes in handy, because right around this election result was when we were buying new stocks according to our system. And here I was thinking like, man, this is gonna suck because I'm about to buy this stock and the whole market is gonna collapse and I'm gonna have a nice fat loss on my hands. That's what I was thinking. But I turned that off because I have that psychological control, because I've been doing it for a while. And I said, you know what, I'm gonna buy anyway I'm gonna stick to my system. And even though I was scared and I really thought the market was gonna go down, what happened? I stuck to the system and it's working out just great. So that's why when I was saying it before, that psychological part really becomes important, because there's gonna be so many times like this where you don't wanna listen to your system that you know works just because you're thinking something else. And this example right here of how we got this wrong, how the market is reacting differently, that's kind of why I moved away from discretionary trading too. I moved more to systematic quant trading, because at the end of the day, regardless of all the analysis, what do I care about? I care about which way the price is moving. And that's what I want to be trading and investing off of. And in this strategy, that's exactly what we do, because we base it off momentum. So it's not based off election results or anything like that. It's just based off what is the stock market doing? What's happening? How do we profit off of it? And the best part is that there is zero research needed, because it's all quant. It's an algorithm that does it for us. But anyway, as always, if you want to learn more about that, there is a link in this video to our free training that teaches you the whole system. And that link is down below in the description and comments as well. So market is looking super strong, but let's see what happens going into the end of the week. And if you want to keep tracking this market with us, make sure you subscribe to this channel so I could see you in the next video. Stay fallible out there. Bye.